Tuesday, June 16th, 2026. The closing bell stopped ringing just about 15 minutes ago, and looking at the closing print in front of me is inducing absolute genuine whiplash.
Oh, it is a completely fragmented tape today.
Totally. Leftler right to the scoreboard. So the S&P 500 fell 0.6% to 7,511.35. The tech-heavy Nasdaq composite bled out, dropping 1.2% to 26,376.34, and the Russell 2000 slipped 0.9% to 2,939.19. But then, and here is the whiplash, you have the Dow Jones Industrial Average jumping 0.6% to a record close of 51,999.67.
Right. I mean, flirting right with that 52,000 level.
Exactly. Wait, how can tech bleed out and small caps slip while blue chips are, popping champagne? Are investors actually fleeing the market or not? What is the narrative here?
Well, what's fascinating here is that capital didn't flee to catch. It just rotated. Like, this wasn't a panic. It was what institutional desks call a great under-the-hood rotation.
Okay, let's unpack this. Because for this deep dive, we're looking at a huge stack of institutional-grade market wrap-ups, price action verifications, and internals pulled right from the closing bell. We need to figure out how a market crashes and hits historic highs at the exact same time.
Yeah, and the tape tells a really clear story of divided capital. When you dig into the internals, the breadth of the market was almost perfectly evenly split. 7 of the 11 S&P sectors actually closed green today.
Wait, really? 7 out of 11 were green while the overall S&P was down?
Yeah, exactly. Led by financials, which were up 1.49%, and utilities up 0.69%. The real money bought this close in very specific value sectors. Meanwhile, the semiconductor index, the SOX, plunged a brutal 5.7%.
I mean, that is a massive haircut for the chips. You had giants like NVIDIA dropping 1.7% to 2.4%, Broadcom shedding 4.4%, and Intel losing 8.5%.
Right. Those are heavy, violent moves. Institutions basically aggressively faded Monday's tech euphoria. They locked in profits and pivoted straight into cash flow certainty.
It's like a seesaw, right? The money isn't leaving the playground. The heavyweights just jump from the tech side over to the value side. But why today, of all days?
So the catalyst was actually a massive geopolitical tailwind. We saw mounting optimism over a tentative U.S.-Iran peace deal.
Oh, right, which caused the oil crash. I'm looking at the charts, and WTI crude tumbled over 4.5%, sliding below $78 a barrel for the first time since March. And Brent went below $80.
Exactly. And cheaper fuel costs spark a massive defensive bid. Energy, the XLE, naturally lagged, sinking 0.82%. But cheaper energy is a huge tailwind for industrials and banking.
Because it acts as an immediate margin expander, right? Lower input costs mean headline inflation cools.
Yeah, institutions were hyper-focused on this lower inflation safety play. So much so that they completely ignored a terrible macro print today.
You mean the housing starts?
Right. Housing starts plunged to 6-year lows.
All right.
But the market just looked right past it because right now, bad news is good news. A cooling economy just feeds the narrative that inflation is tamed.
Which theoretically gives the Fed runway. But, despite this wild sector rotation, overall trading volume was surprisingly light today. Why is everyone hesitating?
Because tomorrow is the main event. It's Kevin Warsh's first ever interest rate decision and press conference as Federal Reserve Chairman.
The ultimate waiting room.
Yeah. I mean, the market is pricing a 97.4% probability of a rate hold at 3.50% to 3.75%. The real fear isn't the rate, it's his updated dot plot projections.
But wait, if everyone is just sitting on their hands in a low-volume waiting room, why hasn't volatility cooled off? Usually a sideways day like this just crushes the VIX.
That is the big anomaly you need to watch. The VIX held completely steady at 16.08, down a negligible 0.74%.
So it's acting sticky. Traders aren't trusting the calm.
Not at all. It's a coiled spring. Traders are actively paying a premium for downside protection because they are terrified of what Warsh might say tomorrow afternoon.
So if the market is a coiled spring right now, what happens if it snaps? Because we need to look at the invisible forces in the market, specifically the gamma walls.
Right, we have to unpack the S&P put wall at 7,500. We closed at 7,511.35, which means we are literally just 11 points away from the edge.
So, to synthesize this for you listening above 7,500, options dealers act as shock absorbers, right? They buy dips to keep things calm.
Exactly, that's a positive gamma regime. But if we fall below 7,500, those shock absorbers break.
It opens a trapdoor.
Yeah, trapdoor down to 7,400 where dealers are structurally forced to sell into the decline.
And overhead resistance, the call wall, is capped at 7,600. So what does this all mean for tomorrow? It means you have to be incredibly careful of getting caught in the chop.
Yeah, the intraday traps today were brutal. Just look at SL Science Holding, ticker SLBT.
Oh, wow. Yeah, that gapped up 200% to $11.21.
Right, it ripped to $14.50, got retail attention, and then completely reversed to close at $11.10. And our bar Inc., ticker OBAI, did the exact same thing.
Spiking from 91 cents to $1.28 before just giving up the ghost and fading back to 96
It was
cents.
a textbook momentum trap.
But, I mean, while the broad market was low volume and full of traps, there was one glaring exception that ignored all the rules today, the $3 trillion anomaly.
Oh, SpaceX, ticker SPCX.
Yeah, the stats on this are just staggering. $52 billion in daily stock turnover.
Which is wild for a Tuesday. And it was driven by twin catalysts. First, SpaceX options went live for the first time today. And second, they announced a $60 billion buyout of the AI coding platform, Cursor, also known as AnySphere.
Which is a massive move. Retail traders were in an absolute frenzy. The stock traded as high as $225 in the morning.
Yeah, briefly pushing its valuation to a mind-blowing $3 trillion, literally leapfrogging Microsoft.
But then institutions faded those highs into the afternoon,
It
right?
did. It ultimately closed at $213.16 or $201.80, depending on the exact print you pull, but still up heavily on the day.
So taking all this in the rotation, the Fed, the traps, and this massive SpaceX volume, what is the day two setup for tomorrow's open?
Well, based on the institutional flows, I'm watching two specific setups. First, JP Morgan Chase, ticker JPM.
Which led the Dow today, jumping 3.7% to $331.
Right. If Warsh is neutral to hawkish tomorrow, keeping yields higher for longer, JPM gets a huge net interest margin boost. So look for a continuation toward $340.
And the second play?
SpaceX. Because this is purely a mechanical play. With a newly listed options chain lacking historical volatility, retail call buying has left market makers short gamma.
So if it clears Tuesday's highs, it could force market makers to buy the underlying stock, triggering a massive mechanical day two gamma squeeze.
Exactly. It's a key structural level to watch.
Okay, so summing up this deep dive, the sea of red tape in tech today wasn't a structural breakdown. It was just a tactical, low-volume rotation before the Fed speaks.
Right. The liquidity hasn't evaporated. It's just in defensive bunkers.
Yeah.
And I want to leave you with one final thought to mull over.
What's that?
Think about the incredible, almost absurd butterfly effect of modern global finance. You have diplomats tentatively negotiating a peace deal in the Middle East, and that single event instantly triggers a massive sell-off in American semiconductor stocks while simultaneously pushing legacy banks to all-time highs.
Wow. Yeah, it just proves that in today's hyper-connected economy, no sector exists in a vacuum. Everything is tethered to the macro environment.
Always.
Well, thank you for joining us on this deep dive. As you head into Fed Eve and prepare your screens for tomorrow's open, remember to keep your risk tight, respect that 7,500 put wall, and keep your focus on the macro. We'll be right here tomorrow to unpack whatever Kevin Warsh throws at the market.